Okay, here we go again for the third time. I tried streaming this earlier, but I just haven't figured that out yet. So maybe in the future I'll be able to do this through live stream. But at the moment, no, it's one step beyond me. Okay, this is Enda here from bullwaves.org. Check out bullwaves.org if you want nightly Elliott wave analysis and you like what I do. Okay, this is Thursday morning here. It's pre-market in the US. There hasn't been much action today, and I know I'm early on this, but I just know that I won't be able to get the video done tomorrow. So I am going to give it a stab today and see, uh, hopefully the market actually goes in the direction that I say it's going to go, um, and then I won't have to retract too much by Friday night. Okay, with all that said, let's get into it. My neighbor is ripping something apart next door. So, if you hear a noise, you probably won't, but it's probably going to distract me. So, if you see me getting distracted, that's why. You know why. Here is euro dollar. Let's get into the dollar FXs. Overall, we've got three waves down in wave two. That's what I'm looking for. We've got wave A done in three, wave B pretty much done in three waves, and we should be looking for five waves down in wave C, and that's what I was looking for last week, but we broke out to a new high this week, and I'll show you that wedge pattern there, or that five wave pattern. But today we are back to pretty much flat on the week again, so we have come back down, and let's see if we take out support. Here is the hourly count. You can see I'm looking at that fourth wave support, so 108.50. That was pretty much where I was looking at the last time as well, but suffice to say, the pattern has come back into range again. We've pretty much gone nowhere for the last week and a half. Um, I am suspecting that this is the reversal that I'm looking for. Let's get a breakaway for at 108.50s to suggest that fact even stronger. So that's what I'm looking for today, hopefully. Here is cable. I'm looking at a similar but different pattern here. So we've got an impulsive move to the downside. I'm looking at this as an A and B pattern, or sorry, a 1 and 2 pattern rather than in euro dollar. It's an A and B pattern. It kind of, it's much of a muchness at the moment because I do suspect that we will turn down again into a third move down. So in this case, it would be wave 3 down. In euro dollar's case, it'll be wave C down. There are bigger patterns at play there, and that's kind of why I'm taking that viewpoint. For the moment, we've got five waves down, quite likely three waves up into waves 2 done. We've hit the 62% retracement. It's time to start looking lower. Here is the extended pattern of wave C. You can see we've got wave 1, 2, 3, 4, and more or less all three waves. The wave 3 pattern here is, can be viewed a couple of different ways, but at the moment, this is where I'm headed with this. And up in wave 5, then we've got three waves up in wave 5. And then within wave C of 5, we've got 1, 2, 3, 4, 5. And now we've got a type of possible reversal here. I'm looking a little lower as a let's say the initial signal level to show us that we have reversed. It's 125 flat pretty much at the wave 3 top. If we break that, that will suggest that wave 1 is underway. Wave 1 down should, be a sizable enough wave. So wave 1 of 1 should probably break that 125 level. So that's what I've been looking for today. Let's see if we can get a break of that initial support in wave 1. Okay, here's dollar yen. The pattern dollar yen is moving along reasonably well. Let's check, are we still recording? Yes, we are. Okay. We've got a possible three-wave pattern lower in wave A underway. How we label that internally is kind of what I'm grappling with this week. You'll see that in a second. So overall, we're looking for three waves down in wave 4. That wave 3 top came in at 151 or 152 pretty much. So now I'm looking for three waves down back towards about 137 again. That's the previous fourth wave low. Um, so let's pick apart this wave A in green, and I'll tell you what I think. So we've got 3 waves down initially off the high. There's the wave 3 high, so it's 151.90. 3 waves down initially. That's wave A. At the moment, I'm kind of siding with the idea that we've got a triangle wave B, but it's still too early in the pattern to be, quite sure about that. There is still a possibility that the initial rebound off the low was actually wave B in full, and now we're moving down into wave C. So that's kind of where, that's the fence I'm sitting on right now. If you want to, that's the little picket fence that I'm sitting on right now. I'm kind of, you know, teetering between two sides on that one, to be quite honest. You could view this as a wave 1 and 2 pattern to begin wave C. We're not there yet either. I mean, it's probably an even split between both of those camps right now. Well, we should know by Friday evening, by tomorrow evening, which way this has actually fallen. In both cases, that wave A high, that 149.75 high, that should hold, and we should head lower for longer, I think. Okay, here's the Dow, the Dow, the Dow, the Dow. The market that has really tested my patience. Okay, so since I spoke to you last, we have kind of again drifted and drifted and drifted to the point where we are nigh on close to invalidating this pattern. Um, if the if the market breaks out to a new high, here is my alternate. This is the alternate count. So we have still got a wave 1 down. It's probably a leading or an expanding wedge, wave 1. And we've got this AB. Well, ABC is what I'm looking for here. I am looking at the moment in wave 2. If the alternate count is correct, it would be wave A up and a running flat wave B, and then wave C. In terms of the alternate count, you can see the wave A high back at 34,950, let's call it. The wave A high has already been broken in terms of this wave C, so the alternate wave C. So we've already completed enough of a rally to call that one complete. Let's go to the short-term count. Oh yeah, before I leave this daily count, you can see the previous rallies. These would be interim rallies or corrective rallies higher. They all gave us higher highs in upside momentum. So you can see they broke out to extreme highs in case of wave A. That was an extreme high back in December 22. In August 22, again we broke to an extreme high up at the 80 level in RSI. MACD hit a serious, how would I say, extreme in wave A. Not so much in the previous wave C. We're back at the same level. We're actually at a higher high in RSI and MACD than we did hit at the previous wave 2. So maybe that's a hint towards that alternate count. Maybe. We shall see, I suppose. But we are right back at that level again. We're right back at that extreme high to match, let's say, the August 22 highs. We're right there again. And we have a similar explosive rally that nobody thought would ever end. We're at the same point here, explosive rally that nobody seems to think will ever end. But it will end. And this is telling you that it will end. And it's going to, if the long-term count is correct, then it's going to end in disaster for the market. So keep that in mind. Here's the 4-hour count. You can see that wave 1 down, expanded flat correction, wave 2. You could still call this a leading wedge, wave 1, and then a simple zigzag correction, wave 2. The hourly count, you can see that we've just been tracking, we've just been running higher, or not even running higher, but just grinding higher towards that invalidation level within this kind of tight channel here. It's hard to read much into it, to be quite honest. The last vestiges of an actual impulsive move was back probably 10 days ago, well, 2 weeks ago now, in that explosion, explosion higher. Right now, I'm just sitting and I'm just waiting to see what the market does, to see where what's the best interpretation? I know longer term that we're going down and we're going to go down in a big way. Uh, you know, there's every indicator under the sun that you want to actually look at um, is telling you that for the long term. Bonds are now actually beginning to turn. Long-term bonds are actually turning again. I think long-term bonds is probably the place you should be next year. But anyway, that's another conversation. But for the moment, this is not where you want to be. Okay, let's move on. We're actually moving through this quite quickly. If you do like what I do, get onto bullwaves.org and check out the membership options, or just join the mailing list. Here is the 4-hour count in gold. I have reluctantly switched to the bullish count. I say that incorrectly. Long term, I'm a bull. I just don't trust what's happened recently. I still think that I have a niggling suspicion that this could be part of a larger correction in wave 2 somewhere, down around here. Maybe this is an expanded flat correction. We do actually break 1900 again. I'll show you on the short-term pattern and you'll make more sense of it. But if we are running higher in wave 3, then we should continue to run higher, and it should be almost explosive, back above 2000, back above 2200 probably even as wave 3 completes. But I'm still skeptical of that, to be quite honest. This is the bullish count on the short term. The alternate count is wave B top, and we turn down to wave C. We seem to have cooled off so far in the last couple of days. I will admit it does look corrective at the moment. I have marked the initial support here at wave 1 in pink and wave 1 in blue. This is 2007 and 1993. If we break 1993 again, I think we are back. We're looking back towards the alternate count and a sizable decline in wave C. And I think I have not ruled that out at all whatsoever. I don't like the fact that precious metals are running higher in tandem with risk assets. So that is just a no-no. We'll see how it goes, but for the moment, just keep that alternate idea in the back of your mind. Crude oil. So we have turned higher. We've completed more or less 3 waves up. We seem to be sputtering right now after this week's rally. You can see, we've traced out 3 waves up in a trend channel. We'll see. I'm still looking at this as wave 4 of 3, but this could also be wave 3 and 4 at one higher degree. So I haven't ruled that out either, especially given today's action and yesterday's action. So we have 2, let's say, initial resistance levels here. So that's previous wave 1 in green and the previous wave 1 in blue. The lower level, wave 1 in green, comes at 80.69. I was looking at about the 80.70 area to complete this 4th wave correction. It looks like a pretty standard 3-wave correction higher in wave 4. We've kind of sputtered over the last couple of days. There's been this kind of whipsaw action. New high early this morning, and now we've given up that again. It's still this morning. Sorry, this afternoon. Just broken to this afternoon. So we have broken the wave A high. So we've got wave A up done, 3 waves down, and wave B done. And in wave C, so far, wave C has hit a broken above the wave A high. So the minimum, let's say, expected high for wave C of 4 has already been achieved. Let's see, maybe we'll go higher again today. I was looking about that 80, 50 level, let's say, to complete wave 4, and then we'd look lower again next week into wave 5. So far, so good. We'll see how it goes. The S&P is kind of tentatively last night. I was saying that maybe is this an actual a rejection at resistance? Well, I sure hope so, to be quite honest, but we'll see. The main pattern remains the same. I'm looking at the zigzag pattern higher in wave 2 as opposed to the expanded flat in the Dow. On the short-term pattern, we came quite close yesterday to breaking that invalidation level, and then the price retreated, or the market retreated off that high. Remains to be seen whether this actually gains any momentum, any steam to the downside. I would like to see a break of wave 4, and then below that, we could mark. Let's see, we could mark this previous wave 4. So we would be looking at a break of 4,400 in terms of the larger pattern. Let's get a label on that. Wave 1. I'm sorry if I'm making you dizzy here. Well, that wave 1 down should retrace most of that wave B, most of that wave C rally. So we're looking for wave 1 and 2 to build that kind of head and shoulders pattern off the top there. Obviously, you want to see that invalidation level hold at 4606, 4600, let's say, call it. We should hold, and we should move lower to break wave 4. That's 4486, and then the previous wave 4 at 4400, let's say. So there's a lot on our plate here. A little bit despondent about the action this week, but we are pretty flat for the week, to be quite honest. So let's see if we actually do roll over. That's on the cards. It's still on the cards, no matter what. But I'd like to see this wave 2 pattern actually hold. Here is silver. Now, this is something I want to point out in silver, and I was pointing out last night, or the night before on the nightly update. Yes, the bullish count is in play. Notice also that the price has reached 2 previous highs, a wave B high most notably, in 3 waves. So we have a 3-wave rally, filled a trend channel at a previous wave B high. So if the alternate count is actually correct here, then we may actually do more damage in the short term than than the bullish count would dare to suggest, because the alternate count is it would be quite shocking, I think, to the silver market, to be honest. Let's see how it goes. It's still quite likely there. It's still possibly there. It could be a 3-wave down in A, 3 up in B, and 3 down again in, or 5 waves down in wave C. So it could be an overall 3-wave pattern lower in wave C. That's still on the cards at the moment. Okay, so we got that wave 2 low. This is the main count, that wave 2 low. So that's the wave 1 high and the wave 2 low. Rallied off that, created a higher low, rallied off that again. So the option is open for wave 3 of 3. Now, if it's wave 3 of 3, then this rally should continue, towards $30, to be quite honest. So I would keep an eye open for that. Here is the wave 1 and 2 off the low. You can see that 3-wave pattern higher, fill the trend channel. So this should be wave 1, 2, and wave 1 and 2. There's a couple of ways of viewing that. I would say at the moment we've done enough to complete that 1, 2, or we should turn into a second wave correction again. Looking back towards about $23 again. So that'll be wave 1 and 2, wave 1 and 2, wave 1, 2, 3. Wave 1 and 2, wave 1, 2, and 3. So towards about 23.50, let's say, for wave 2 to complete. So 3 down in wave 2, that creates another lower degree bullish impulse wave, and then you got wave 3 of 3 of 3 to come, if that is correct. Just at the back of your mind, keep this idea, screenshot this idea, and just keep it at the back of your mind. It's still a possibility. Okay. You see, Bitcoin. Forgive me. Sometimes the old Freudian slip comes out. Bitcoin. Forgive me, Bitcoin, not Bitcoin, Bitcoin. That's what I really meant to say. You can see that we have basically moved sideways for the whole month of November. Nothing has been achieved here. It seems like the upside potential of this rally has now been, achieved, or has now been completed. So I would look for a completion of a wave C of B top sooner rather than later, and then a retracement back into this explosion higher. So that wave 3 explosion back in late October, that seems to be, let's say, the best option in my, humble opinion. So wave C of B to close out, and then a reversal down into wave C overall. Okay, let's move on. Give me the DAX maybe. The German market, we're still, no matter what might be fundamentally happening in Germany, you can't keep them from buying stocks. They think it's, a free for all forever, free money, just buy stocks. We're behaving quite like the US market, to be quite honest. There's very little difference here. It's more or less a repeat of the S&P, probably even topped on the same day and bottomed on the same day. So it's all one market at this point. Let's see if the impulsive nature is proved correct or wrong of the previous pattern. And that's what I would suggest. The FTSE is holding up, it's strangely quiet over the last few months, even right back towards May. It's basically just grinded sideways. We have a small 3-wave correction higher again in place over the last month. So a small 3-wave correction over the last couple of weeks. So the possibility is still there that we are going to reverse into a third wave. I would hope so. The market doesn't seem to want to do anything else. So let's see if that plays out over the next few weeks. Okay, I think we're done. Thanks all for watching. You might see on the channel that I did try and do a live stream earlier. That didn't work at all. I'm going to try that again. I would actually like to do these as live streams. So maybe watch out. I might do a couple of tests during the week, over the next few days, and see if I can actually pull a live stream together. It would be cool to see some questions and answer some questions and stuff like that. I always leave you all with a convincing argument, or an argument, or an apologetics argument for the good news, the gospel, the good news of the Lord Jesus Christ. I always leave with some sort of apologetic argument. I don't have an apologetic argument today. If you're going to be honest with yourself, we all know that we're sinners. We fall, we fail every single day. We do not live perfect lives. We don't live. It's not even us not living up to our potential, because we don't have the potential to be perfect. That's the point. God is perfection. God is perfect holiness, perfect righteousness, perfect justice. And sin cannot live in the face of God. That's a problem. And it's a problem that every human being has. And you ain't going to work your way up to God, because you are not perfect and you cannot do it. But there is a way. And God gave a way, and it was prophesied thousands of times in the Hebrew scriptures, in the Torah and the prophets. It was prophesied throughout it. If you look at it, you will see it. Salvation is called for everywhere. And salvation in Hebrew is Yeshua. Yeshua in Greek is Jesus. The anglicized version of that is Jesus. Jesus is salvation. He came, God in the flesh, lived the perfect life, died as the perfect sacrifice to pay for all sin. Who could pay for all the sin of humanity? Only God. And he did it through Jesus Christ, his only begotten Son, if you want to call it that. But it is God in the flesh, coming into the stream of time and paying for our sins. In a court of law, if someone pays for your transgression, you are free to go. So God came in, paid for our transgressions, and we are free to go. It's a free gift if you accept it. The thing about a gift to a free will human being is it's left there for you. It's up to you to take it. So I would urge you to think, to accept the free gift of salvation, to walk from death to life, to walk out from under the headship of Adam and walk into the headship of Christ. And I would urge you to do that. And that's my argument today. Okay, so it is Thursday afternoon. It's time to say goodbye. If you join the website, I'll see you tonight. If not, I'll hopefully see you next week on YouTube. And maybe it'll be a live stream. Okay, God bless. Bye-bye.